introduce our moderator, Will Baldwin, co-leader of Jones Walker's Maritime Industry Group and leader of the firm's Maritime Transactional Team. It's been a pleasure to see Jones Walker as a firm and Will and his colleagues in particular lean into the energy transition and taking a lot of their expertise long developed in offshore oil and gas and applying it to offshore wind. Something you may not know about Will is that as of 2020, he's the honorary consul for Norway for the states of Louisiana and Mississippi. That's great. In that role, he works with the Norwegian Consulate Generals in the U.S. to assist Norwegian citizens in the U.S. And it's not bad in terms of collaborating with Team Norway's efforts in offshore wind. So when this video wraps, Will's going to open it up. Thanks, Will.
Thanks, Mike. And Mike asked me for something that's not on the bio, and I gave him that. I didn't realize he'd actually tell the crowd. So happy to go out. It's always good to tie in the Norwegian piece. We have a great panel today talking offshore wind, U.S. and abroad. We have Eric Evans, Vice President of Strategy with Crowley Shipping, David Morant, Managing Director of Eneti, and last but not least, Andreas Østern with D&B's Head of Energy Transition Solutions. The video you're seeing right now has no sound, and we thought that it made sense for David, considering that it's his group, to give a little bit of background on what we're seeing.
Thanks very much. I'm the world's worst sports commentator, so I'm not quite sure what I can add to this. But you can see, we've transitioned our company over the course of the last 14 months. We bought a company called CJAX in August of this year and effectively listed it onto the New York Stock Exchange. Last week we raised $175 million. It's essentially to build next generation of wind turbine installation vessels. The asset you see here is our NG16000. It's a Gusto NFV design, currently under construction at DSME in Korea, which should deliver into the back end of 2024. The real opportunity with these assets is that the new generation of turbines, which is what's transformed the sort of grid scale power opportunity in this industry, are of a scale which has led to an accelerated rate on the water obsolescence of existing tonnage. But on top of that, it has transformed an industry which is 30 years old, really, in terms of its footprint in Northern Europe, from a government subsidy-dependent industry into one which can deliver significant grid-scale power worldwide with reducing dependence on imported hydrocarbons and the volatility that introduces, and importantly for many countries in the world, a local indigenous source of power, very regenerative for large areas in terms of local content, load outputs. And I'm sure in the context of this panel, that not least in the northeast of the United States, where this industry is set, I think, to have a pretty transformational impact. And it's no exaggeration, I think, from the people we're working with and speaking with, to say this is one of the biggest opportunities in US offshore energy since the Gulf of Mexico opened up. And so for us as the slightly lonely New York Stock Exchange listed play on this for the time being, this is really why we want to get moving with our new asset. So I'm glad you didn't ask me to walk through an entire turbine installation. I think everyone gets the idea from the animation.
Great, and just to set the stage, currently there are 2 wind farms operational offshore the U.S., generating up to 42 megawatts. President Biden and his administration have announced the goal to achieve 30 gigawatts by 2030. That's a tremendous amount of steel that needs to go in the water, and wind farms need to be constructed in order for that to happen. In order for those wind farms to be built, they need a lot of vessels, obviously. There's a study that's been done that up to 27 vessels will be needed start to finish in a wind farm, and that's why we're excited to talk to these folks to see how that gets done. I'd like to start with Andreas, looking maybe more at a global level from a financial perspective, and tell us how D&B's looked at, I guess, this market when deciding whether to lend, and then some specific factors for the U.S. as we now venture into the U.S.
Thank you. As you mentioned, David, it's a 30-year-old industry, but it's still very young if you look at it. 10 years ago, the first generation of the vessel turbine installation vessels, wind turbine installation vessels were constructed. And I think the fleet is around 17 vessels today with 9 new buildings. So from the bank's perspective, there's also a small universe of banks that know the sector. That is also makes it a bit challenging to raise the capital. And so what is needed in order to understand this industry is to move away from an oil and gas one-off high-margin industry to a repetitive low-margin industry, and what that entails. And that means very much away from a asset lending loan-to-value approach to more a cash flow net debt EBITDA approach on how you structure and size the debt. And also for these companies, it is, as you shown on this video, is extremely challenging operations. So having that platform that you have a track record and operational excellence is incredibly important to attract capital. So if you look at what are the capital sources, is bank debt, obviously, but it's also for some of the investment grade rated design clients, you can also approach the bond market. But it's also by no doubt very important for ECA financings going forward for renewable. But that is still not that yet, it hasn't happened yet, but it's coming quite soon.
And one of the things that David just mentioned was the equity raise that I think closed yesterday, or maybe give some more detail about the attractiveness, David, on equity right now, and maybe why equity was chosen.
Sure, I'm happy to do that. I mean, it was a breeze. It was really easy. Wherever Ted is, thank you, Ted, Jim. It was a very important race for us, and I think in terms of the company's prospects, we've transformed with that raise. Not only the asset base, we've extended what is our on-the-water leadership. We have a 5-vessel company at the moment with operations in Japan. We're just installing Taiwan's largest wind farm as I speak, literally as I speak. And with that raise, we've also announced our intention to order a Jones Act vessel in terms of the compliance with the Jones Act for the US offshore wind build out. So I think it's fair to say that equity right now in this space is difficult. It was certainly something where we felt the opportunity, and we still feel the opportunity, I should add, is substantial. And the reason for that is that it takes a bit of understanding. The level of top-down visibility in this space is extraordinary. And I think out to the end of the decade and well into the next, the demand profile that we've seen through the last 14 months has only continued to ramp. The shortage of vessels, given a 36 to 39-month build window, is also tangible. But against that, you get relatively short contracts. So you can tessellate that to build some visibility, and the levels of returns on the asset we think are extremely attractive. So taken in the round, we think that makes it a very, very good risk reward for public market shareholders. But as someone who spent 2 weeks trying to persuade Bloomberg to create a category for us in terms of the GIGS category, it's difficult to come to US institutions when there is a current lack of awareness of what is effectively an infrastructure tsunami coming to this part of the world over the course of the next 3 to 4 years. So it takes some understanding. I have every confidence that in 4 years' time we'll be sitting in this room and everything you're seeing around you will be pretty much powered by US offshore wind piped in 65 miles on an HDFC cable. And that will have a significant impact on our industry, on the carbon footprint of the tri-state area, and particularly on the number of opportunities in the United States for this industry and the amount of steel and maritime expertise and capital that it will require.
And Andreas, did you have any comments there?
No, I'll just say that companies are attracting the equity markets, and I think Cadler have done 2 equity issues on the Norwegian Stock Exchange, and there are other, say, companies within that value chain that's also approaching the equity market. So I think that is still indeed possible, but investors and lenders need to be educated on the sector. And I think that's positive to have more listed companies. You get more investor attention and also more coverage from the analysts on it. That I think would just be positive.
Great. I want to pivot now and switch to you, Eric, and I actually want to talk about the JV with Østern. Can you tell the audience what you're doing Crowley's doing with Østern, why that made sense, and why the partnership was decided.
Sure. When we started looking at the offshore wind opportunities in the U.S., we looked at each sector and where we could participate in. Installation is one with our feedering service, terminals and logistics services, which we do. The part we didn't really have a lot of experience around was the vessel maintenance, the O&M side of offshore wind, and the vessels go along with that. So I guess it's a success story for the COVID environment. We met SBOT over Zoom. We built a relationship over Zoom. We signed contracts over Zoom, and met them for the first time on Tuesday. So there are ways to get things done even in this environment. But what we really like about what they bring to us is some of the experience of operating SOVs in Europe, and we leverage that with Crowley's experience in the offshore business and some of the other vessels we've operated to put together a pretty exciting opportunity for the industry.
And just so the audience knows, O&M is operation maintenance.
Yes, sir.
Just to switch to one of the issues I think that's at the forefront of vessel owners trying to finance new builds, because the developers are wanting new builds for vessels will participate in offshore wind construction and then O&M, is the issue of utilization and whether vessels are going to be financed on spec or with long-term contracts. Andreas, can you talk generally about how that's been an issue when looking at potential deals that you want to participate in?
Yeah, it's a good question, and it also depends a little bit where you are in the value chain. So would you ask relating to a wind turbine installation vessel or a very specialized foundation installation vessel, or whether it will be more an SOV market? But I think, again, important thing is the track record, the operational platform you have, and we take corporate risk. The utilization is less in the industry because the developers are only chartering in the vessels when they have made the FID decision to make actually the rollout of the wind farm. So that means that you also need to size the debt accordingly, so you have enough liquidity to weather that. But I think if you look more into the operational and maintenance market, it's a different picture. There you have also the long-term contracts that the project financiers also require in order to finance a wind farm, that you ensure that you have enough uptime on the wind turbines. So of course there you can approach institutional capital and really match the financing to that tenor. Is it possible to raise capital for on spec without a contract? I think that is very challenging. If you have a corporate enterprise that has an acceptable risk in order to weather some of that, maybe it's possible. But just as a single asset, no contract asset play, I think that is very challenging, if possible at all, to raise in the bank market.
I'd love to hear from David and from Eric, because you all offer different perspectives. David on the turbine installation vessel, which obviously is one of the more expensive vessels in this whole chain to construct, and also has possibly the shortest utilization to go with it. So maybe we'll start with you, David, and then Eric will ask about the SOV piece of it.
Sure, and absolutely. I mean, as Andreas said, our asset has relatively short contracts. I would contend that the visibility that the asset has in terms of its employment is enormous. And I think the analog, and for some in this room it might be a painful one, but the analog actually is probably the ultra-deep water rig market for the early noughties, which people kind of forget was a fantastic market until it wasn't. But effectively, what you saw through that period was a pivot strategic asset. And this is really what a wind turbine installation vessel is. It's a vessel that you can't retrofit, you can't take existing jackups, and it's a necessary, it's the key asset in the supply chain. You can't fit a field without it. So we were very forensic in the way that we looked at our position in the supply chain. We wanted to have the asset which, frankly, was the pickaxe, the gold rush, that no one could go round, over or through, that everyone needed to have. It's less than 2% of the overall CapEx budget. So you sit there in the supply chain with a tiny position in terms of cost. For us, that means enormous pricing power without actually having a meaningful negative impact on the overall cost of the field. And in terms of I would say the the current contracting environment, we announced with our initial vessel back in May, we expected a contract within 12 to 14 months, so that would be next summer, and there's nothing we've seen which would sort of row us back from that. And the contracting conversations we're having right now are around 25, 26. So, and against that backdrop, as we outlined in our raise, we have an asset that does about, we believe on our projections, somewhere around the 20% unlevered return on the capital. So you put that all in the mix, and the complexity here is the execution, getting the asset ordered, getting it delivered on time and on budget, making sure you've got the right asset for a demanding customer. But if you can get that right, and that's really what our colleagues from CJAX allow us to do because they have that contracting experience, then the rest of this, from our perspective, is a really sensational opportunity. And I think that's why we've wanted to bring this to the New York Stock Exchange. We feel that US institutions will have a gradual, I would say, but growing understanding of the scale of this opportunity and the power of the incumbency of being a world leader on the NYSE. Our journey is really kind of just beginning after that raise. But what I would say is, if we look out to 2030 and beyond, the growth has continued to increase, to accelerate. We've seen more countries over the last few years, the last few months come in. Israel, Poland, the Baltics, Vietnam has just announced the world's largest offshore wind farm. We've also seen major companies come in. We've seen the integrated energy companies, as they now wish to be called. I think the CFO of BP was quoted as saying upstream is now a wind farm, it's not an oil field. So you've seen BP come in, Eni, Total. We've yet to see the US companies come in, but I'll go out on a limb and say they will. And so all of that means that this is a true pivot moment for an industry which has learned lessons over the last 30 years in Europe, but is now really coming of age. And I would suggest the US is actually right on time in terms of applying that new technology to a transformational energy opportunity.
Great. Eric?
You're right, we do operate in a little different market, or at least we're pursuing that with the SOVs, and those are longer term contracts tied to operations and maintenance contracts, the technicians that are out there. So utilization is a big part for us. We're not a public company, we don't have access to those markets, so for us it's okay, where can we arrange the capital we need? I'll just say this because I see our treasurer Steve Himes and CFO Dan Warner here. We're competitive. We would like to win the Fresh Deal Award. So come see us, and hopefully we can get something started today, and come back in June and accept that. So, but yeah, this is really these kind of environments are what we look at to help in our financing side. Utilization is an important part of this. I think the other thing though we're seeing with all of our customers that we talk to them is it's great you've got a vessel, how can you make it clean? They don't want to see these highly visible SOVs going out through the horizontal bridge with a whole pile of exhaust coming out behind them. And so that's an important part for us as well. So we'll look at how we can combine that with the term.
Very good. I'd like to shift to what has been called the feeder vessel model for constructing an offshore wind farm, and sort of talk through with the audience the feeder vessel model compared to the play that Eneti may be looking at with the Jones Act compliant turbine installation vessel. We actually have a slide that we can maybe put up. This was from the GAO, the Government Accountability Office, and it is intended to be a very high level explanation of what the feeder concept looks like. I thought, Eric, it made sense for you maybe to explain what it is more from the industry side, and then talk through how you as a company, Crowley, looks at this short-term and long-term, as whether this is going to be a viable method once turbine installation vessels that are Jones Act compliant come online.
First of all, I think there's room for both. So we're hoping your vessel currently under construction comes here, and you also go ahead with the Jones Act installation vessel. So the basic concept of a feeder vessel is a U.S. flag or Jones Act compliant barge, loads all the components at a dock in the U.S. and transits out to the foreign flag wind turbine installation vessel. From there, it's just a lift from that vessel from the wind turbine installation vessel, and then they do the installation there. Right now in the Gulf of Mexico, or for years, we've taken very heavy, very expensive pieces of equipment out on our barges and done similar lifts. So it's not entirely a foreign concept. It's worked for years, and it's just a new industry to try it in. But yeah, generally our plan is to essentially, you can't quite see it in this diagram, but the barge would moor right next to the installation vessel and be held in place. And that helps with stability and lifting and lack of the potential for damage.
Very good. David?
Yeah, I'd agree with Eric. I think there's definitely room for both of these. And in fact, we referenced some of the big projects coming out in New York and Empire as an example, Vineyard further up the coast. These are areas where you're going to need a barging solution. You won't be able to get a WTIV under the Verrazano Bridge. So in many ways, this is a necessity. The view we took, and appreciating this, I mean, the first issue that I say is there aren't enough foreign flag vessels either. So this doesn't necessarily hack the Jones Act. There's a shortage of vessels worldwide, and I think that's the first thing. The second thing I'd add is that we are a customer-centric company. We've had to do a lot of research in what we've done, and these customers taking an enormous balance sheet risk and an enormous construction risk in what they're putting together. And the way that they have done it habitually outside the US is with a vessel providing T&I and installation, transport and installation as a contract. So for us, that was an important consideration. Forget our particular views on how to do this. We wanted to know what the customers wanted us to provide them with in an ideal solution. I think then the third thing, which is, as I mentioned before in the opening remarks, this is a 30-year-old industry in Europe, and many things have gone well and many things have not gone well. And one of the areas where you talk to someone who's been in this industry for many years in Europe, and they'll talk about the Sheringham Shoal project, which was the only time that the industry's actually tried the barging, and it was a significant problem. So I think having someone like Eric and his team, having someone with that level of experience to provide this solution is going to be very, very important, because we shouldn't underestimate the operational challenges of this, the ability to do this in sea states out in the North Atlantic with swell, the value of the things that you're moving, the safety elements, the number of repetitions. This is a very, very challenging operational problem. And I knew that when we started sort of outlining this as a bunch of London-based pen pushers, and I think that our tech guys already had their head in their hands before we got about 3 sentences in on how this was going to work. So we've taken a view that if you look at what the US opportunity, we believe there's plenty of work for, and I'm probably understating it if I'm frank, for a Jones Act built wind turbine installation vessel. Everything we've seen from the client side has reassured us of that. These are significant capital projects, and we will need and require an onshore US disponent owner. We're a foreign filer despite our NYSE listing. But I think we have the confidence. We're already the consultant for the Dominion vessel, which is under construction in Brownsville. And that's giving us an enormous amount of IP and understanding as the challenges, which are significant. But I think it gives us a high degree of confidence with our balance sheet, with our shareholders and our investors to follow in with that. And we know already that the client demand is there for the asset. So I don't see these as necessarily competitive. There's certain logistical challenges with both. And that will be necessary that both succeed in order for the US to even get close to the 30 gigawatts in the Biden plan.
Very good. I'd like to shift quickly away from pure vessel issues and focus more on non-vessel infrastructure. And Eric, I was hoping that you could give some of the infrastructure investors in the crowd what kind of sense or what your sense is, what kind of non-vessel infrastructure investment offshore wind will require. And maybe talk a little bit about the Salem Harbor partnership with Vineyard Wind that Crowley's doing.
I'm happy to. When again, going back to when we first started looking offshore wind and where we enter, we felt terminals and ports was a very important part. There's a finite resource, land, they don't make it anymore kind of concept. And so we looked at, okay, where are ideal places to have terminal and infrastructure? How do we leverage the logistic capabilities we've built up over the years through the rest of Crowley, and have identified a few different locations up and down the East Coast and also out on the West Coast as well for floating wind, which is not very far behind, so don't lose sight of that. And so one that came up to us was this property in Salem. And we've had conversations with Vineyard. We actually have agreements with Vineyard and the city of Salem to develop that property. We're waiting for the state of Massachusetts to award the next lease to Vineyard. And when that happens, everything starts moving forward, and that should be before the end of this year. But it is, everything's got to come across the terminal at some point. And whether it's coming in by truck or by rail or by another vessel coming in, there's a lot to get stored on a terminal and a lot of work done on the terminal, and then moving everything back out to the wind farm. So we felt that was important.
And one follow-on question there with respect to local content. How has that helped, I guess, your presence with Salem Harbor with the local content issues that are frequent across many of these wind farm developments to be constructed?
Yeah, that's great. That comes up all the time, and there are commitments developers have made for local content. But more importantly, just as a company, Crowley has always embraced the local content concept. And how do we get local workforces trained? We've partnered with some of the maritime academies on the East Coast, and we've announced some of that. We'll announce some more shortly. But how do you get the workforce trained, and how do you really open up the opportunities to communities that maybe have been left out before, and bring in some more some more diversity, some more opportunity and inclusion. This is a brand new industry, and it's a chance to really kind of make it the way we should make it in the future.
Very good. Andreas, I'd like to switch to you on one issue that's really come up amongst it's U.S. flag owners who have vessels that they think they can redeploy in offshore wind, but certainly an issue that has come up abroad as well, where international players would like to redeploy maybe oil and gas assets in the offshore wind space. Do you see a path for retrofits and participation by existing vessel owners to maybe redeploy a stacked asset or have a better utilization?
Yeah, it's a good question, and we get that a lot of the time. I think a lot of our clients and actors in the industry are already involved with some of the assets, that being cable layers, or you have different COCPs, because there is not enough vessels to service the industry as of today. But when it goes to retrofitting, for us, it is actually your clients that kind of decide what will be the economically viability of an investment, and also what kind of technical risk it will be. So one thing that we as a lender will kind of consider is also the residual risk, and to what extent you will get the re-employment after an option period. And one of the bigger things that we think around, and has been discussed today as well, is what is the need to be carbon neutral in the whole supply chain. This is very green companies. Østern has an ambition to be carbon neutral in 2025, and maybe in the whole supply chain in 2040. So that is something that needs to be taken into consideration, and whether a retrofit will actually be that competitive to meet all those new requirements that will come as well.
Hey, Greg, any comment there? We've got a few more minutes left.
I think, Andreas, you're spot on. There may be a place for redeployed or retrofitted vessels, maybe in the short-term construction market, but long-term, the developers do not want to see those older vessels going out to their wind farms and blazing it with their insignia or whatever on there and looking like a piece of junk. They want to see something nice and shiny and clean and be able to reference that.
And David, I know that Eneti's focused on the turbine installation vessels, which is a newer fleet, but any comments here on retrofits?
Well, actually, it was the when we first proposed the idea at board level, we have a very eminent lady on our board, and her first question was, can't we just get an old jack-up and retrofit it? To which the answer was, I really hope not. Because if it was that simple, everyone would be doing it. And I think that's really one of the reasons we're so interested in the WTIV, is because you really do, these are very, very technical purpose-built assets, whether it's the variable loads, the leg length, the height of the crane that it can operate. And bear in mind, these jack-ups, they'll jack up, once or twice, every other day, versus an oil and gas jack-up that will be once or twice a quarter. So these assets really are very, very specific. They're in short supply, and they are a pivot asset for a global industry. and that's really why we went for this.
Andreas?
Just one comment though on the wind turbine installation vessels. There are a couple of these vessels in the industry today that are able to upgrade their cranes to take the new larger turbines, which is a positive approach as well to continue. And maybe also looking at the picture here, some of these assets will maybe have good crane lifting capacity, but not the deck space to really be that competitive on the transportation of a lot of wind turbine sets out to the wind farm compared to new building. So, maybe they will have a second life in a structure like this where you kind of specialize a little bit more on the transportation side. I don't know, David, what do you think around that as well?
Yeah, I think that's right. I think that there's definitely some retrofit opportunities with the existing fleet, but that's what that will be. They'll always be hindered by the fact that they might be able to carry, they might be able to jack up as much, and these are expensive. You've got 120 expensive guys and girls on board one of these vessels out at sea for up to 2 weeks. You have problems with older assets. These can be $1 million a day type costs across the field. So from our perspective, the demand we see for high quality tonnage operated to the best standard, purpose built for what it's being designed to do, we think is significant and still largely unsatisfied by the current maritime supply chain.
Very good. Well, I see we're coming up at the end of our 30 minutes, but I do want to ask any questions from the audience. I see a hand. Sorry, Mike, I hope that's okay.
Thank you, very interesting talk. Question more on the Jones Act side and touching a bit on Eric and David said, that a lot of the developers have learned a lot over the past year working internationally. Obviously, the cost of the equipment is multiple times more here, and the contracts aren't necessarily there to make up for that. But at least on the CTV space, I don't know if it's the same thing with the other larger vessels. The developers are getting more involved in the actual design and spec. Andreas, does that impact, how you see it on the capital markets? Whether, if they're getting so involved in the design, does that de facto mean that they'll, more likely keep the ship even without the contract?
Yeah, I think that's a positive, and that's a positive that most of these companies, like Eric here, is very closely related and talking to your customers, so that you ensure that when you also allocate your equity, that you get something that is really needed. For the CTV industry, it has historically been a more fragmented industry, and been more smaller operators and players into it. So they have raised capital more locally, I guess, if you should kind of talk broadly around it. I guess you will always find the right capital depending on the company and the structure, but those CTVs are particularly competitive in the nearshore wind developments. And, if you're getting more than 40 nautical miles outside of land, then the SOVs become more competitive. So I don't know, Eric, what do you think about the CTV business? You maybe see that a little bit more.
No, it is a tough one. It's lower barriers to entry and so on. I think over time the developers are going to have to realize they can't have their specific bespoke CTV, and there's going to be some kind of sharing and pooling of resources, and that's going to help. But I think when you can leverage a vessel off 2 or 3 different developers, they're all in the same location basically, right? Then they'll start seeing some economies. Right now, yeah, it's a tough market out there. We pursued some CTV business. We're not real excited about the returns that come out of that, but it's one of those components of a full-blown turnkey service that we have to look at.
Thank you very much.
Mike's giving me the signal that I think we have run into our time in. Well, thank you very much. Great job, panelists, and we will turn the mic over to the question.